Good day, traders. We'd like to welcome you to another exciting video chart breakdown brought to you by beaconequity.com. Today we're going to take a look at HOKU. HOKU did close up over 21% today on just over 1.3 million shares. And as you can see here in the background on our volume bars, today's volume was approximately 8 to 10 times what it's normally. And we had huge upward momentum, and the stock did close up 21%. So this is why we're going to break down HOKU, because we think there may be more left in the tank here. What we notice here is that HOKU today broke up through not only the 200 but the 50 moving average line and a previous high. And we are nearing the possible tests of the next level of resistance, which is at 295 and 308. Today's high was at $3.05, so we did try to pierce that $3 mental resistance level, but we didn't sustain and we didn't hold over that at the close. So what we see here moving forward on HOKU is we're going to see if we can break over that $3 line one more time and actually break through the $3.08 resistance. If we can break that $3.08 resistance, the next level of resistance for us is going to be at approximately $3.30. And that was basically the top of these two candles here that were back in early October. And that was done on pretty strong volume too, so that resistance may be fairly strong. So what we see moving forward on HOKU, if the equity continues to either have a gap up in the morning or an early run, is for number one to break the $3 mental resistance range. If that happens, I think we see a quick possible spike for at least another maybe 10 or 15 cents. Again, testing possible resistance at $3.08 to $3.30. Now, if the equity does pull back, what we'd like to see here is what's called the 50% retracement rule, or holding 50% of the day's candle. So let's zoom in a little bit closer and take a look at this big, large candle that was formed today. If we were to take a line and draw our line on 50% of today's candle, that's going to put us right approximately at this level right here, right at around $2.50. So if HOKU does gap up tomorrow and people start to take profits, which is only natural after a large move today, and the equity does pull back, we're going to see if we can hold the $2.50 range. That is also the 50 moving average line, and it's also right around the 200 moving average line. So I think those areas around 245 to 255 should offer some real strong support for HOKU. And just like we told you before on the 50% retracement rule, if it holds that level, typically what we see is a smaller secondary bounce. The secondary bounce isn't typically as big as the first bounce, but it does offer a nice day or swing trade. So if we bounce off 250, there's the possibility of us testing one more time $2.85, which is a close for the day, and possibly the $3 range. So we could see anywhere from a 45 to 55 cent swing, which would be a great day trade, or like I said, a swing trade for us short-term players. If we start to go below $2.50 or $2.45, I think that would be a sign of weakness for HOKU. And at that point, I'd look here at the previous levels of support, which is at $2.14 as the secondary level of support, which I may look to possibly buy off the bounce. Let's go ahead and take a look at the indicators for HOKU. Naturally, these indicators are going to be looking really strong based off today's movement. As you can see, the RSI is up over 70. It's at 78 right now. It's over 70 for the first time in quite some time, basically since the very beginning of October. The MACD line did break through the zero line just the other day, which is a nice buy signal for us short-term traders. And as you can see, the black line is currently making some good separation from the blue signal line. As long as the black line remains above the blue signal line, I think that's a buy signal or a hold for those of you that are already in HOKU. So let's go ahead and finalize this video and talk about support and resistance one more time. What we see moving forward for HOKU is a possible gap up early in the morning based on today's large 21% gain. If the equity gaps up, we see resistance at $3, $3.08, and $3.30 ranges. If the equity gaps up and then starts to sell off on profit taking, which is only natural, we're going to see if we can hold the 50% rule of today's candle. The 50% rule puts us right around $2.45 to $2.55. If we bounce off those ranges, look for a smaller secondary bounce, which could bring us to $2.85 or to a $3 range once again. At that point, I think it would be smart to lock in profits on HOKU and take it as a successful day trade or swing trade. If you have any questions about this video chart, you can always come check us out at beaconequity.com. And as always, good luck and happy trading.